Traders, it's your boy the family king. As usual, we shall always be here. Specifically, you're always here for what? For trading. Yeah. So as we invite your friends to join the live stream, guys, we can start off slightly. Slightly, we can start off. Yes. As usual, every trader when gets this mic, they always go into the analysis and they show you how they have made some given profits. You might not be able to know whether they made they have already what they have already made the profits. You get. So personally today, as the Founding King, I'm directed here to take you through the fundamental analysis and technical analysis. Basically, I'm very sure that even other traders that have been coming here for the Thursday analysis or the live streams, that we are doing the same thing. So to put all that aside, guys, allow me inform you and welcome you guys and thank you as well to use TBS. Very many traders out there, they don't know TBS. They know TBS has a broker that has three initials, that is TBS. But normally, the reality is that it is called Tamam Brokerage Services. And by the way, to make things more clear for you guys, you have to know that this is the only broker that we have in Uganda, is based in what? In Uganda. Meaning that this is the only broker that you're gonna give your money $100, you're gonna deposit your $10, and you feel secure with your what? With your money. So guys, as you invite your friends, you do anything you want. As a forex trader, I can basically recommend you to go on and trade with TBS, that is Tamam Brokerage Services, due to that reason that I've given out. And the reason is that you will always feel safe and secure with your money, regardless of the account size you have. Even if you have a 10K, you have 100K US dollars, you can deposit on Tabam and you trade. So allow me take this opportunity to welcome you all guys that are on the live stream. So we are going to talk about forex trading. To go back from the start, forex trading is also an abbreviation. I'm very sure majority they don't know that. But let me inform you this, that forex trading is a abbreviation. This abbreviation is got from two given words, that is foreign exchange. They always get the first two or three initials of the given words. Then we come up with the word forex. Then trading, that is something very clear. So before I don't want to go back there because I know I'm talking to professional traders that are really informed what trading is. Meaning that at least for now, at least for now, we are going to look through the analysis. Before you go to the analysis, we have to know what is analysis, what are the types of analysis, how do we analyze the charts, you get? So after knowing that, then we can kick off and we start and we get to know how does Fanny King analyze the forex market, how does Fanny King make all those, or he is able to trap and grab those sniper entries that you normally what? You normally see. So by seeing that, I'll call up all of you guys that are so far that have joined for the past 4 minutes to kindly share out this live stream to all your friends. Don't be so selfish to yourself. Just share the link, call up your friends, you get to know how we analyze the forex market. So without wasting time, let us talk at analysis. Analysis, this is the way you can be able to predict, let me use the word predict, or anticipate the movement of anything you want to analyze. Now, if it is the forex market, I can say that this is the way we can be able to analyze, or we can be able to know or predict or anticipate the movement of a given what? A given computer, a given chart or time or any pair. So we have three types of analyzing. I'm very sure very many traders, they don't know that. If I talk about three, very many they will say, what are they? because I'm very sure very many traders that started 2020 to 2023, they only know one and two, and the majority know only two. You get? Majority know only one, which is the technical analysis, and it is our type of analyzing the market. But we have the second one, which is the fundamental analysis. And lastly, this one, I'm very sure very many traders, they have never heard about it or they don't know it. This is what we call the sentiment analysis. Sentiment analysis. So I'm only having a few time. I'm having less time here, guys. But at least allow me take you through these three types of analyzing the market because I'm limited to time. But if I had more time with you guys, I wish I could give you something, or I could elaborate the analysis, those three types, more or further. So we have the fundamental analysis, and if I'm to give you the definitions over these things, or over these three types of analyzing the market, number one, technical analysis. This is where you're going to be able to visualize the market depending on the given structure of the chart or depending on the given structure of the forex market. You get? So there you can be able to analyze technically. Then if you have to analyze fundamentally, this is where you'll be able to anticipate or anticipate the future moves of the market depending or looking at the charts of the of a given economy. Here fundamentally we are always looking at the economy of a particular country. Then technically, we are always looking at the actual charts of a given currency. You get a given pair. The reason why we call it a pair is because we are trying to verse two given economies. That is, if it says GBP USD, meaning that we are versing the economy of Britain with the economy of USD, that is America. You get? Then, if we talk about sentiment, and I'm not going to kick so much in sentiment because very many they don't know it. And sentiment, this is where you'll be able to determine the bearish or the bullish of a given market, depending on the future fundamentals. I know very many traders, they don't know what we call sentiment analysis. And by the way, I am not here to confuse you traders, meaning that I won't also tamper with sentiment today. So, technical analysis. There are very many ways of doing technical analysis. I've given a lot of words. Let me write something down so that we can get to know what we are dealing with. So here we shall say we are talking about analysis. Okay, analysis. And an analysis, we have three types of what? Types of analysis. You know what I can tell you guys is that as a forex trader, never be proud of yourself that thinking that you know everything. For you are done with the forex market. Never, it will happen. Personally, I normally say that forex is another religion. Forex trading is another religion. It is a bit wide. You can never exhaust forex trading, but you can get some concepts or some paths and you exhaust them. Now, like analysis, you can exhaust the analysis. You get? So we have three types of analysis, and number one is we have the technical analysis. We have technical analysis. Technical. You know, it's better to understand. I'm not here as an English teacher. Yes, technical analysis. Technical analysis, I've explained it. Then you have the second one is the fundamental analysis. Okay, fundamental analysis. Then lastly, and this one is not so common, it's called the sentiment. I know good traders after here you can go on and research about it, or you reach out to me personally, we'll talk about it and we get to know. It's called sentiment analysis. I'm very sure very many traders they never knew about this. They never knew about the sentiment analysis. So these are so far are the three types of analysis that we have talked about that I know very many traders are not good with it. Very many traders are not good with technical analysis, the analysis thing. So when you talk about analysis, every trader outside there or every mentor has his or her own way of doing analysis. But whatever thing is doing, is under the three. Is either doing a technical analysis or she or he is either doing a fundamental analysis. However, I've never experienced any trader doing sentiment analysis here in what? In Uganda. So, after understanding the three types of analysis, we have said, we have explained it, I've given out the definition to those people that came early. So, we have to go on and look for technical. Let us start with the technical analysis. Technical analysis. Technical analysis is also having very many ways. This is where you find traders say that personally, I'm trading with a different strategy. I'm using this strategy and this strategy. Now, here we shall talk about here we shall talk about the strategies. Then you shall have to know what is a strategy. The strategies, isn't it? Strategies. Okay? So under the strategies, there are very many strategies that we have. And every trader outside there is coming up with his or her what? Own way of trading. That is a strategy. So let us look at, I'm going to look at three that I know that are very common in my country, which is Uganda. Very many traders are using SMC, the smart money concept, isn't it? It's called smart money concept, smart money concept. Then other traders use ICT, that is the inner circle what? Inner circle trading. Okay. Then under there we have another strategy which is called the Falcon strategy. I'm very sure a few of you traders know that. It's called the Falcon strategy. Then under that one we have support and resistance. Support and resistance, isn't it? Resistance. Then we have what we call supply and demand. Supply and demand, isn't it? Supply and demand. These sometimes tend to be the same, but you will only see that they are same only if you don't know what you are doing. That's when you can say that these things are totally the same. Supply and demand, but they are different. Supply and demand and support and resistance, they are different. Then we have those people that use trend lines, but personally I won't say that trend lines are what is a type of a strategy. And under here, I won't be afraid of putting my own strategy, which is called the impulsive strategy. I'll explain this impulsive strategy. The impulsive, you call it the impulsive strategy. Impulsive, if to somehow summarize it, you can get into it, and we have supply there, demand, we look at support and resistances sometimes, and personally combine all these strategies to get one strategy, which is the impulsive strategy. So some traders normally call this a strategy which is called price action trading, but personally I say that all these strategies here above, they are based with price action. So all these are strategies, and these strategies, they are under technical analysis. All of these ones, they are under technical analysis. Don't forget that. So before I proceed, we have to know what is a strategy. Technical analysis. All these strategies that I've talked about there, they are under technical analysis. I don't know whether my chart, everyone is able to look at my chart, but at least allow me, guys, make myself clear. I don't know whether you're seeing the chart clearly, but at least I'm trying to put something clear. For those that are trying to follow up, I'm trying to put something clear. And as a good trader who is seriously hungry with making more profits in the forex market, I'm expecting you to be here, not to get the mistakes, but at least you be here to learn something, add something on your trading, trading. So as I proceed, I've said technical analysis, we have three types of analysis. Then under them, we're having technical analysis. And right now, I'm trying to break down the what? The technical analysis thing. So, and I've said that under technical analysis, we have what we call strategies. And as I speak, I want to make something clear for you guys. I want to make something. A moment, a moment. Okay. So let me hope my voice is very clear to everyone there. So I'm trying to break down something and a strategy. Every trader is defining a strategy in his own way. But personally, I can say as I was learning, by the way, I got this definition. I think that was 2019 on some my brother. It was WCK's live stream. Then he was asked the same question. So after trading for some time, I have also realized that it was true. So as I say, the technical strategy is a product of experience. That's what I can give you. Why do I say so? You having experience in something, you're going to come up with your own strategy at the end of the day. All of these that I wrote down here, these are just guidelines that are guiding you towards your success in a given scenario that you're doing. So if you're doing something and you have gained some experience from it, you're going to come up with strategies. Let us take an example of someone that is a teacher. Every teacher is having his own strategy of teaching. There are teachers that come crammed everything else is going to talk about. There are teachers that come when they have a syllabus to follow. There are teachers that come when they're just going to ask questions and answers. All of those are strategies that are used depending on the experience of a given what? A given teacher. So the same thing applies to Forex trading. So when we talk about a strategy, this is a product of experience. First, put that aside. We can say this is the way every trader outside there, he is able to execute and exit a given what? A given trade in a given market. However, we can still say that a strategy is a way you manage yourself in forex trading. To make something you make it wide, meaning that strategy is not only on charts, but how do you manage the money you have got from charts? How do you treat yourself? You get how do you treat yourself after making money, after losing money in the forex market? So that is your strategy. Someone will come and say, personally, after making a big loss, I'll go for a gym. I'll go on for some physicals. I got to do some exercises. You get. So after realizing that, then that is your own strategy. You get. So you cannot say that someone using smart money concept that is a strategy wrong. That is a way you trade. But the other thing is a bit wide. The way you trade is there other things that you do when you make wins, when you make losses, when I make a win, I'll have to flex, that is a strategy you're using in your forex career. So under that is also technical analysis. Now, after giving you a lot of theory part, then let me try to elaborate some of these things. So when I talk about there are very many strategies, guys, quote me well. There are very many strategies outside there, but today at least allow me talk about these that are put on the whiteboard that you're seeing there. We have the smart money concept, inner circle trading, Falcon strategy, support and resistance, supply and demand. Then we have the impulsive strategy, then you have price action, depending on traders. But all those ones that we have there, you'll find out that they lie under one strategy. So how can you be able to differentiate between these strategies? That's question number one. Then answer for that question number one is that the way you can be able to differentiate between these strategies, the way you can be able to differentiate between all these strategies, first of all, you'll have to see the terms that are being used. That's number one. So me, when I go on a forex chart and I find some funny symbols like XXX, I find signs of dollars, I find someone trying to show me the break of market structure as if I don't know it. Someone trying to show me the joke, that is the change of character, as if I don't know where it is. Someone, is trying to show me that this is the, the stuff. You'll be able to know that this trader is at least using one of the two. Is either using a smart money concept or in a circle trading. By the way, there is even another strategy of using indicators. It's also there. It's also there. Then, how will I be able to know that someone is using support and resistance? Of course, I'll find someone showing on his chart saying that this is the support area and this is the resistance area. So, how will I be able to know this supply and demand? Of course, the terms. I'll find someone showing me that this is the support, this is the supply area, and this is the demand area. I'm going to go deeper into that one. And then, how will I be able to know that this is a impulsive move? Of course, you will find there terms like expected sell areas, expected buy areas, no risk areas. You will get to know now this guy is using the impulsive strategy. Then, how will you be able to know that this is price action? So, price action, under all those strategies I've listed above, price action falls there. What is price action? Price action, allow me put it on my board. Price action. What is price action? Yes. So when you talk about price action, this is the way someone can be able to analyze the market, the forex market. Price action, price, price action. This is the way. It's the way. Let me use the word. It's the way. It's the way of analyzing what? It's the way of analyzing the market. Okay, moment. It's the way of analyzing the market. Yes. This is price action. I'm trying to define price action, guys. The way of analyzing the price the forex market. I'm trying to put these things down because I know some people outside, some serious people are trying to write down something for their future use. This is price action. Price action. I'm trying to define price action. Why am I writing down price action? It's because it's the way of analyzing the what? It's the way of analyzing the market. Let me use the word analyzing because I already defined it at the start. It's the way of analyzing the what? The forex market or the forex charts. Let me use the word charts. The forex, it's the better word to use, forex charts or the okay. Let us use the word forex charts since we are talking about forex. But however, even those people that are trading cryptos, the futures, the stocks, they can use the same thing. It works there. It's the way of analyzing the forex charts depending on the what? On the previous moves or the previous data, depending on the what? On the previous moves. Let me use the word moves. Why am I not using the word data? It's because data, normally we shall find the word data in fundamental analysis. So allow me use the word previous moves. Okay? Moves. When I talk about moves, it's very clear. Previous moves, depending on what? Depending on a given time frame. On a given time frame. Given time frame. Does that make some sense to you guys? This is price action is a way of doing analysis, is the way of analyzing charts depending on the previous moves, depending on a given time frame. Very clear and easy to understand. So for you to find someone saying that this is the break of market structure or this is the change of character, he has applied price action. For you finding someone identifying an order block, that is an OB, it is pure price what? Price action. So I've been able to write that down for you guys majorly because very many traders call price action a what? A given a different strategy. So after doing that, then Let us try to use at least one of these ones. And personally, allow me take you through supply and demand. Why am I going to use supply and demand? Because it is a common one. Everyone that is using any strategy like the SMC, you will find yourself also marking out supply areas and demand areas. Okay. However, there is a very big difference between supply and demand and support and resistance. Those two things they vary each other. They are totally different from each other. You get? They are totally different from each other. And then if you are talking about the Falcon strategy, if you are talking about the Falcon, so someone was asking me, oh, you didn't talk about the Falcon. Falcon, there we find a lot of things. That's where we shall find the patterns, chart patterns. We shall find their trend lines. Now someone was asking, then you have not written down the trend lines. May I use trend lines to make money? No. Trend lines, it falls under Falcon strategy. So the strategy that the Falcons, the trend lines, chart patterns, these ones called the diamonds, the symmetrical triangles, the head and shoulders, double tops, double bottoms are found Falcons. So if I'm trying to break down technical analysis before I do some charts. This is the theory part of it. So to make something clear for you guys, did you know that the Falcon strategy is more good and better for confirmations during taking a given trade? I'm very sure. Very many traders never knew that. But at least I can take, I will prove it. I will prove it. So now people are saying the man came in to give us it's like on a radio, but I'm just trying to make something clear for you. Very many traders outside there, they normally teach Forex, but they don't try to make this thing clear for you. So I'm going to use the impulsive strategy. But under impulsive strategy, we are going to consider supply and demand. Then I'll be able to tell you what is, how do we define demand, how do we define supply. That was the major target for today, by the way. So before we go into the technical analysis, there are things that are necessary for any trader to have or to know when you are to do technical analysis. Number one, me, I call them the necessities. Number one, you need to know that the Forex charts are so fractal. What do we mean by the word fractal? Fractal means it is like, let me say, it is a shape that changes from time to time, or you can say that fractal is a pattern that changes on all time frames. It is a pattern that changes, and by the way, at the end of the day, you'll find it the same, but it changes. So, what I can say, the forex market is so fractal. What you find on the weekly time frame, it's what you'll find on the monthly time frame. You'll find it on the daily time frame, 1 minute. They're all the same, but they just change. At the end of the day, they come back to the same algorithm. So you need to know that the forex market is fractal. Forex market is so fractal. You can go on further on your internet or the AI. You consult what's the meaning of fractal. You'll get to know what I'm trying to talk about. Okay, so you have to know that the forex market is fractal. I've explained why am I saying so. So what are the necessities? Like I'm trying to say that what are the major things that you need to know or to have as a forex trader for you to be able to do technical analysis? Necessities. I call them necessities. Let us use the word major requirement because I think necessity is a bit wide. Major needs for someone to do. Major needs for analysis. Let me use the word analysis. Analysis. Okay? So number one, you have to know that we have what we call time relevance here. Time relevance, that is TM, TR. Time relevance, you must be able to do that. You can analyze from monthly to weekly, from 1 minute to 15 minutes. You have to know that. Don't get yourself attached to one time frame. Don't get yourself attached to one time frame. And by the way, these are some of the things that will help you even to confirm your given your trades. Okay? On your trades. Then we have someone you can use indicators. Indicators, not all indicators, but at least there are some indicators that you know you can use, such IE, that is the, should I give it out? No, let me just stop the indicators. Then from the indicators, you have to know what is liquidity. Okay, what is liquidity? Liquidity. You have to know what is liquidity. Then, after knowing the liquidity, then you need to know, it is very crucial. It's very crucial, guys. You need to know when to trade, when are you supposed to trade, when to trade. Of course, the opposite is very clear, and when to not what, and when you're not supposed to trade. Yes. Then after combining at least those, there are very many others, but at least after combining this, then you can be able to go into, or you can dive into the technical part. You get? Let me even put this one. The we call it the fundamentals. Fundamentals. They also applied here. The fundamentals are applied here. Fundamentals. Fundamentals are also applied here. Fundamentals are also applied here. Then you can go in for the analysis, for the technical part. The technical part. Okay? So after at least having all of these things, we can now dive into the charts, because I have a lot to put on board. I have to talk about the demand. What do we understand by demand? What is the meaning of the demand? How does the impulsive strategy work? You know, we shall go to that later. So now, in front of me, I'm looking at a chart of GBP USD. GBP USD, that's the Great Britain pound versus the United States dollar. Okay? So, we have daily time frame. I don't want to remove my notes. We shall use them later. Or it's better I use another GBP USD. Let me use another GBP USD. Can I add another GBP USD? Okay. Let me use another GBP USD. GBP. Yes. Let me use this one. Let us keep the notes. Keep our notes. Just keep our notes. We need the notes. We need the notes. Okay. So this is the GBP USD. Now in front of me, I'm having a chart of GBP USD, and I'm going to try to do analysis the same way I do it. Then we shall look into what I've talked about. Now, this is the pound. The procedures are very clear. Before you go into the other things that I've talked about, let me first show you how you can do it. The easiest way of doing analysis, or is just go to each and every time frame, look for the key areas, key zones. Find the key zones, and when you are finding the key zones, always be able to mark winches. That is according to my strategy. Mark the winches. Don't mark body closes. Why am I saying so? Whenever you mark the body closes, you might end up missing some money, or you might end up being kicked out of the market. So always mark the winches. Winches, this is where we shall always find liquidity most of the time. And the market will always have to look for liquidity on a given area, and they sweep it. And at the end of the day, you find yourself having good analysis towards a given pair and towards a given direction, and you find yourself hitting the stop loss. At the end of the day, they go to your what? They go to your direction. So this is the easiest of doing analysis. Always look for the highest over the given particular time frame. Look for the highest over a given time frame, and look for the lowest over a given time frame. Like I say, you mark the winches. Now, for people like people that are swing traders, people that are trading swing trades, always look at higher time frames. Look at higher time frames. That will make some sense for you guys. Then, after doing that, remember under the requirements that are needed, we talked about time relevancy. You need to be able to use all the time frames. You have to be very, well, how do I say it? How should I say it? You have to be so crucial with all the time frames. You have to be free with all time frames. Don't get yourself attached to a given time frame. Because what you see on a day time frame, you will find it happening on 5 minute time frame. So you have to use all the time frames. However, it is better for you to monitor your trades on higher time frames for you to be able to grab some good money in the market, in the forex charts. So we're having a lot of areas here. According to price action, you must be able to know at least from the given area technically, the market will have to go to a given area depending on price action. Depending on price action. There is a major reason why I didn't take this area, I didn't take this area, and I took this one. So those are some of the lessons that some people will have to subscribe to brokers like TBS that why this is one of the brokers I know. At least every week he will be hosting for you some such lessons. Maybe today or another day today I might not be able to tell you the reason why this area, why not this area due to time, but at least in further time when you subscribe to this channel, you'll be able to trade with us for some given time. At least you'll get something and you'll add something on your trading career. So you won't only be able to trade with the good spreads that TBS has, but at least you will even be directed in how to trade with such spreads with different metals. I don't know whether I make myself clear. So we have that area. So if I'm to minimize this chart, remember this is the time frame. It is a bit wide. If you select any area and you go to a given time frame, lower time frame, you will always find yourself finding a lot of noise there. You'll find a lot of movements and structures. So you might end up missing the market. So this is the time frame. These are the major zones that we have. These are the major zones that we have so far. We have these zones. Moment. So these are the zones that we have. We have the now normal on the impulsive shortage. I will say this is the expected sell area, and I am not saying that you personally can also call it the same thing, but this is an area of interest where we expect the market, if it is to go back to that area, by all means we shall have to receive some sales. Why am I saying so? Number one, this is a higher time frame. This is a higher time frame, meaning any zone spotted on a higher time frame, it can highly be respected. It can highly be respected. Okay. So here we are. Now you have to go to another time frame, from that time frame to a lower time frame. I'm trying to show you how you can do technical analysis in the easiest way. So before we go there, we have, if you have to consider price action, we have this area. I don't know whether everyone is seeing this area. So personally, when I'm trading the impulsive strategy, I can call this the low risk area. Low risk area. What do we mean by the one low risk area? Normally, I make it a dotted line. Why do I make it a dotted line? Meaning that it will remind me when the market gets this price, I'm not supposed to over risk from there. There are traders that are Philippines, there are traders that scalp the market. You have to be very secure with such areas that I call low risk areas. So after finding the low risk area, then we have this area here. I'm taking the winch, or you can take the body close. Since already you have the major zones, you can take it. Then on the time frame, this is how at least we can expect USD to give us today's move. However, today they have not respected this area. They have stopped in this gap. Then they have given us the tweezer bottom, meaning that if the market closes that way, it can be a good indication for the market to push upwards. Let me try to show you if the market is to close that way. Then we can expect the market to come to this level. They can come to this area first, because when this area is a bit stronger, this is a day time frame, remember, then to this level. Then from here, they have to respect this area. They will have to respect it. Then they come to our level, then we buy you. You get? That is at least what we can that is an expectation on BBP USD day time frame. So putting all those aside, we can at least first go to 4-hour time frame. We get to know what we have on 4-hour time frame. Now here, this is what I'm trying to do, compiling higher time frames with lower time frames. And most of the time, you doing this thing, you'll find yourself getting sniper entries unknowingly because you'll be refining higher time frames to lower what? To lower time frames. So currently, like I said, we always consider we mark the highest and the lowest of a given time frame. Got me of a given what? Time frame. So when I have the highest, I'll just have to mark the lowest. I just have to mark the lowest. I just have to mark the lowest. So this is the lowest I have. So on a 4-hour time frame, this area is turning out to be my expected by what? My expected by area. Meaning that at this area, I will be buying by all means. I'll be buying. Okay? You have to be very sensitive when doing analysis because any mistake you make trading, when any mistake you make doing analysis, you will find yourself paying some unwanted dollars to the broker. But if you are good in what you are doing, you can minimize that. So a good chart is supposed to look like this, meaning that if I'm to buy from here, if I'm to buy, I'm supposed to enter my trade, to put my trade here. I'm trying to show you something. If I'm to buy as a trader, this is supposed to be the entry. Then I target that area. I'm trying to show you how a clean chart is supposed to look. Then the stop loss has to be below the zone according to what teachers of forex trading what they say. But personally, I always say, you see that zone where you put the stop loss, always try to put it at least 10 to 20 pips lower. Why? To avoid being liquidated, yet you are on the right track. So this is the chart. This is how the chart is supposed to look for especially a swing trader. But but personally, as a forex trader, you know the market is very it's not easy to buy where the market is going to exit from. As I was looking at some traders, they were saying that the only way you can be able to know that the market is going to end from here or any area, at least you can be able to use indicators, use what? No. Me, I don't say that. You can realize this technically. So after having a clean chart like this, I'll have to look for other key levels. Now, once I see the market is already in a downtrend, but let me assume if it is to buy, where should I expect to put my what? My other trades. So the only way you can identify that by the use of pure price action. If you know how to use the price action, you can be able to identify at least areas where you're supposed to make money from. Okay? So according to price action, I'm gonna go back further to the previous moves. Like now, this level, I'll consider it, and I'll put my low risk area somewhere there. Personally, I always make my low risk areas dotted. Why? To remind me that at the given price, the market, I'm not supposed to over risk there. Because why am I not supposed to over risk? It's majorly because you might end up being kicked out. Drawing these zones, you must be able to know that there is liquidity on given key levels, we have liquidity on given areas, then we have manipulation in the market, we have fundamentals, all those things. Those are some of the things that drive the market. We have imbalances, those are some of the events or the stuff that the market always moves towards to. Meaning, if you are not so accurate in your analysis, the technical analysis, you might end up losing money unknowingly. Okay? So, my dear friends, try to always be careful when doing technical analysis. Marking this area, you can mark this area. Why am I marking area? Because you're having liquidity of this level. But I didn't want to mark this area because you might miss out the market. If you go to lower time frames, you might find yourself missing out the trade. Why? Because of some various reasons that I can't talk right now because of time. So the same thing that we have done here, it is the same thing we're supposed to go on doing. You have to know from the day time frame, we have 4-hour time frame, and from 4-hour time frame, we have 1 hour. Then from 1 hour, you go to the lowest, which is 1 minute. Okay? So the more you go lower, the more you'll be having a noisy view of the charts. You might end up being manipulated. Okay, so normally I can do the analysis on 4 time frame when I'm looking for the swing trades, and I enter my trades, I relax, I give it some time. Okay, so you can even go further to 1 hour time, 1 hour, If you go to 1 hour, by the way, don't forget this. Whenever you go to a given time frame, the first thing you could do is supposed to refresh. So you'll find that the low risk areas of 4 hour time frame are turning out to be the expected sell areas of 1 hour time frame. If now I think I've been following from where we have come from, okay? From where we have come from. So whenever you go to the low time frame, you'll end up minimizing. Now this was this entry we had. Now if you go to 4 hour time frame, you're going to minimize the zone. You make your work to look more neat. You know, even the charts can describe a trader, what kind of a trader you are. The charts can also describe what kind of a trader you are. Okay, so you have to be very neat in your work. Now, I can further go on analyze and I show you how we got the entry, why you can buy from here, why we didn't buy from here. I can further go for that, but due to time, I think it will be next time. It will be next time. So after having a chart of the sky, this is the chart we have. Now I have to identify what are the low risk areas. What are the low risk areas? Low risk areas, they'll always help you to know when to exit the market, when are you supposed to execute, and when are you supposed to go out of the market. It will help you always to target yourself on a given trend of the market. So, meaning in the impulsive strategy, always you have to move with the trend of the market for you to be secure and safe. Okay? You'll always have at least to go into the lower time frames for you to be able to know when are you supposed to trade, when are you supposed to exit the forex market. So from there, I don't know whether my chart is being watched. The low risk areas, I said we consider price action. Price action, I explained it for those guys that came early. I gave out the notes for those people that didn't have the notes. Now, this is the reason why I had sold GBP USD, and after getting some good pips, had to run out of the market because I had entered full margin. Okay, so these dotted lines, remember I told you the dotted lines, they always low risk areas. And these low risk areas, you're not putting them depending on what you want or what you see. You'll always have to look according to the previous moves of the what or previous structures of the market. That's when you'll be able to know that at a given area, I'm supposed to put the low risk area. And these low risk areas, they'll always divide the pips. Let me show you something. If you are to calculate from here to this level, I'm having almost 200 pips or 150. So 250 pips, let us say 200 pips. 200 pips divide by 3. You will see that at least you'll have to be targeting 60. Your first take profit has to be 60 pips. Then your second take profit has to be at least 50 pips. I don't know whether it is making sense. So you can find someone executing trades and all the trades are hitting take profits basically because you are using this concept. Now let me first put them for you and you see what I'm talking about. You know, forex trading is so physical. What you talk or you trade what you see. So I've divided by into 3. The first one, if I'm to sell from this level, I'll first my take profit will have to give me 60 pips, 61 pips. It means that if I'm using one standard lot size, at least I'll be closing out with $600. Okay, if I'm to use 10 lot sizes, that's when I'll be able to close out 60. Okay, I don't know whether I'm making myself clear. That's how swing traders make money, and that's how you can be able to passive and prop funds. Divide your chart, give yourself a given target, then execute the market. Don't fear to put to trade. Okay, so after dividing, it means that if I'm to close the first trade, let me show you. Let me even put them and you see it very clear. So my first take profit will be there. Always, this is my rule I tell to my students. Make sure that always your stop loss is very small compared to the target you have. So meaning that number one, you are risking at least, we can say your risk to ratio is 7 to 8, meaning that you are risking we can say 1 to 3. Okay, so from there, that is the first take profit you have. And your take profit, I promise you, it will be hit. If your analysis is very, very accurate. By the way, this is the same concept I use. Those people that are in my Telegram channel, I think you have been following me for some good time. You know this. This is what we normally do. And that's how you'll be making money trading. And people will call you an Illuminati. People will call you that you drive the market. They'll call you funny names. But don't you forget the goal. The goal is to make money. The goal is not to make names. The goal is not what. The goal is to make what? Money and to be freedom. To be free. That's how you can be able to get free trades on one given pair in one given direction. Okay? So that's how you can make your work to be very smart. Now, here, personally, when I'm doing analysis, I normally stop on 1 hour time frame. Why? Because 1 hour time frame is merely, it's very difficult for the market to manipulate the 1 hour time frame. I wish we could be here longer. I could show you the after effect, the results over this time, this what? This the analysis we have made. Today, I've looked on at GBP USD because I had to give you some theoretical lessons that you had to know as a trader. As a what? As a Forex trader. So this is the setup we have. You can further go to the lower time frame. Now, we have the key levels. You will find that these levels that we are marking, they are called the demand and supply and demand levels. Now, if you look at this area, the market is trying to fill up the demand levels that we had. If you got the data time frame, this thing is making it very clear for us. You see, the market was oversupplying. The market was oversupplying, if you can see. Which one should I use? Okay, the market was oversupplying, if you can see here. Are you seeing? It was a bullish run, eh? It was a bullish run, meaning now the market is trying to fight to give us at least the what? The bearish run. Whereby from this bearish, we are not yet verifying it. Now, this is how personally I do my break of market structure. Why do I do it like this? Normally, it can help you to know that the market, now, if it was an SMC trader, this would be the BOS. I'm very sure and 100% confident saying it. And he will say, this is the break of market structure, which is very accurate, BOS, isn't it? And now, this is how you can be able to make money on the BOS. When you do it this way, you will miss out. You will miss out. Always wait for the market to go. I don't know whether I can be added some time to explain this. When we talk about the demand, before I continue, I'm going to come back to this. When we talk about the demand, this is the move. Let me say, this is the consolidation area. The move that consolidates before an impulsive move. It is a discounted price where to buy from. Now, let us take a look here. Let us take a look here. We had this move here. The market gave us this move to this level. Then they had to come out with smaller candles to this level. Now, this is the impulsive move we received. Now, with the impulsive traders, as the impulsive trader, we don't trade. Guys, what me well? We don't fight with the market. We have to wait for this BOS to happen. Now, what I will do, let me assume this move is not yet here. What I will do, I will mark my zone this way. This is how I'll mark my zone, indicating that by all means, if the market is to break this area here, if the market is to break this area where I see the orange circle, they'll have to respect it again. Okay? Those some traders, they call it break and retest. I don't care what you call it, but the thing is, do you make money from it? Okay? So, if you are doing the BOS, at least make it to go to that level. Make it to go to that what? To that level. Make it to move to that what? To that level. So, why? Because with the impulsive traders, we don't force the market. The rule says that wait for we always sell or buy the market when it is called the traders rule. It is called the traders rule. I normally share it in my Telegram channel. It's always there. We don't force this move because this is a manipulation. Most of the other pairs like XAUSD, you can end up miss this. You can find yourself losing trades on here on this move. But what you do always, just target this level. Target it. Target this level, what you call the BOS. Target it. Target this level to this here. Say at this area, after seeing the break of market structure, I'll be looking for the buys. You have to make sure that you're so accurate when doing what? Analysis. Because whenever you're not accurate, you will be kicked out of the market. So after that, you have to target. Don't be so greedy when doing analysis and when executing trades. Then to this level, you will put your trade. Always the stop loss has to be below the zone. Then your first take profit will always have to be to this previous high, swing high that we had. That is supposed to be your take profit. Always don't be greedy with the market. Then after making that on your previous high, they'll always have to hit your take profit. I promise you that. And even if you have to go for those traders that use indicators, let me show you another thing. If you have to use the indicator and you know how to use it very well, you'll be able to find the discount areas, and it's where they're going to respect the market from. I don't know whether I'm making myself clear. These things are not easy to be understood by everyone, but at least we can try. We can try to explain it to each and everyone there, and we see that at least you can make something. You can make something for okay for a given day. So that is the easiest setup I have on KBP USD. And personally, in my conclusion to this setup, if this area where we have the low risk area, if it is violated, let me try to label them out for those that I'm trying to do. This is the risk area, low risk area, low risk areas. Low risk areas, remember when you're trying to use the impulsive strategy, low risk areas will always be risk areas, they will always be dotted. If not so, you can give them a different color depending on you yourself. Depending on you yourself, you can give it a given color, a different color. Then here you say it is unexpected buy. Why? It is the demand area, expected buy areas above. And this zone, to my fellows, I told them here we can flip accounts from there for those flippers, for those that want to flip accounts. There you flip accounts. By the way, if you are trading with the TBS, they have one of the good leverage that is 1,000. Yes, you can also be able to flip your $100 account. Just deposit now and see. You can deposit and try it on XAU. You will see yourself making some millions of money. Okay, expected sell areas below. Okay, so you will find yourself having this chart and you'll be making some reasonable money alone. Like now, I've said that people are using people that are using supply and demand. Always, you must be able to find that actual area where the market consolidated. Got me well. Find that actual area where the market consolidated first, and then we received an impulsive move. So after receiving an impulsive move, what you should always do, wait for the market to come back to close the impulsive move, then move to the direction of the impulsive. That is the impulsive strategy. I don't know whether it is making some sense to you guys. Let me see whether I can make it clear to you guys. So if you flip this setup like this, let me show you. This was the area where the market consolidated. Are you see? Let me make it here. This, let's assume we missed all these buys, whatever. Okay, let us say we missed this. This is the buy you received, the consolidation area. I don't know whether you're seeing it. This is the consolidation area. Then after the consolidation, don't fight with the market. I know my traders, don't fight with the market. You make money. After this consolidation, the market consolidated here. Then after the consolidation, we receive the impulsive move. As an impulsive trader, fight this move. Let it go. Let it go. Then after going, wait for the market to come back to this area. You receive some funds. Let me prove this to you. Let me prove this to you. Okay. After the market coming to this level, let me first remove it. After the market coming to this level, are you seeing very clear? It had to come back slowly, slowly. For that patient trader who's very good in waiting, you know what you are doing. Trading is your job. You are feeding on trading. After receiving an impulsive move, the market consolidated on this area, but slightly coming back to our what? To our zone. After coming to the zone, don't you find it the same way? So whoever got this entry using this concept of impulsive strategy, I don't know whether it is making sense. Using this concept of impulsive strategy, A moment. So someone who uses this, you found yourself making some good money. I say, so you find yourself making some reasonable money. Up to date, how many pips did you get? How many? Do you remember the take profit? The stop loss has to be below. And after there, you find someone saying that trading forex is very difficult. But the problem is not the thing is not difficult. The problem is you. Because technically you can be able to do analysis technically and you make some money. And someone who used the impulsive move was able to grab at least 154, 55 pips. That is forex trading. Things are always on your eyes, but you cannot be able to know where you are going to what to execute the market from. I don't know whether it makes yourself clear, but as I'm concluding my live stream, guys, I'm out of time. As I'm concluding my live stream, guys, always know the reason why you are still failing. It's not that you don't know how to trade. You know how to trade. I'm very sure about that. But the problem is you. You yourself, you don't know how to trade. You fear losing your money. You start touching your money. You don't want to deposit. And another thing is that one of the major reasons why people are losing money, it is on what kind of a broker are you using? What kind of broker are you using? Do you trade with brokers with good spreads? At the moment, as I speak, Tamam, that is TBS brokerage service. Like I told you earlier, this is the broker that we have in Uganda. And this broker is giving you leverage 1 2,000 and is having the best spreads you have seen. And these are the spreads that you're going to use, and they are very small with what? With at least low what? Low commission, you get? So that is it, guys. The notes were provided for those people who came earlier. At least I've tried to elaborate something to those people that have been following. The notes were very clear to everyone that was following us at the start. Okay, okay. So you'll be able. I've heard that these notes will be uploaded. Those are some of the notes that have been used to guide us. You have the strategies there. We have the technical. Basically, all this was technical analysis. We had to get the definition of price action. Okay, we have to get the definition of price what? Price action. Yes, guys. Allow me stop here. I don't know. Next time when I get time, to when I'm given another chance, at least I'm very sure we can kick more further into this. I was told to go to take you through the fundamental and technical, but unfortunately, this thing is very wide. We are able to look at fundamental and technical analysis, guys. So by the Founder the King, as usual. Stay well, guys, and don't forget to subscribe to the channel. TBS broker that you can use in Uganda. Have a good night, guys.